Hey, what's going on, everybody? Max here with Because Bitcoin. And today, for 10 minutes max, we are going to be talking about Bitcoin, DXY, gold, the relationship between them, and what we expect potentially moving forward. Before we dive into the charts, guys, do me a solid and please hit that like button and also subscribe to the channel if you are new here. We are approaching 12,000 and I'm hoping to slice through it today like a hot knife through butter. Right here we have DXY. This is the US dollar index. Now it's not just the US dollar. There's, multiple things in here. It's actually, it's got the dollar, it's got the euro, it's got some other currencies, but basically, think of this as having more or less a negative correlation with risk, right? When people are buying the dollar, very aggressively, it typically means that they're selling volatile assets, they're selling stocks, they're selling crypto, and they're moving into the dollar. Okay, so let's actually take a quick look at this pair, right? So we'll just look at Bitcoin here real quick, because the reason we're talking about it today is because unfortunately we have to. The dollar is kind of at an inflection point, and it is looking relatively strong, at least for now. But we're going to get into all that and more, and I'm gonna explain to you guys what I think. So up here is DXY, and just a quick look at the negative correlation. All right, so here let's draw a few arrows. Bitcoin goes into a bear market. Oops, in 2022. Forgive the goofy little arrow there. And look at what happens. DXY goes straight up in a straight line, right? And again, we can go back through we can go back through time and see the relationship here. Again, Bitcoin's not 100 years old, so we can only go back so far. But you can see that, there's a pretty obvious relationship here, right? Like Bitcoin topped, DXY is near a bottom, right? Even going back to the parabola that we had in 2017. Again, this is Bitcoin, this is DXY. On a high time frame, right? DXY goes down aggressively, and look at what Bitcoin does, goes up aggressively, right? So you can see, and it's the same for stocks, right? Like DXY down, stocks and crypto, and your portfolio is doing well. Now there's little windows of time, right, where they can sync up and move up together or down together. But on the high time frames, it really is in fact the opposite. And then again, right here, you can see, pretty clearly DXY moves down, last bull market, Bitcoin moves up, and then right here, DXY bottoms globally before a big rally. Um, Bitcoin tops. So let's delete that. So what are we going to talk about today? Well, DXY is rallying a little bit. We're seeing, some additional turbulence for Bitcoin at the previous all-time high. Again, nothing we haven't seen in other cycles. We've talked about that, how, basically for Bitcoin, and here, quick example, right? This is Bitcoin's all-time high in 2013. We're going to zoom in now. Look at what happened in 2017 before the parabola began. We swept the previous all-time high. You can see this line, we nuked. And then, of course, we went on to go up at 20x from that point. Let's look at the next one. Last cycle, right? Look at what happened at the previous cycle all-time high. Again, we swept it right there, nuked hard off of it, and then we obviously went on to put in a significant rally after that. What are we doing right now? Here's the previous cycle all-time high of 69K. Look at what we're doing right now. Again, we're just kind of chopping and ranging above it. But I want to talk about DXY here because it's going to be difficult for crypto to rally, as shown if DXY goes on a crazy rally. And if we see DXY do this, and starts to move up here, it's going to be very difficult for Bitcoin to enter a bull market. Okay, just looking at historical trends, right? So there's something I wanted to point out here, and it's actually what's happening with gold. All right. So let's take a look at gold, because gold is doing something spectacular right now. Gold is moving up aggressively. Gold is at 2,400 an ounce right now, um, which is it's in price discovery. It's in its all-time high right now. So, why are we talking about gold? Let me just fit this chart, and then we will dive into all of it. Well, it's because typically gold and the dollar are, they have an important relationship to one another. All right. And right now, gold is moving up aggressively. And here, it's a lot to fit on one chart, but let's see what we can do here. And I feel like gold may be telling us what's about to happen to the dollar. All right. Now, it's not perfect, right? But typically, people, our parents, they have used gold as, a bit of a, it's a better form of currency, right? It's not as printable as the dollar, right? So let's take a look at it, and I'll label these real quick here. So we have gold right here, and we have DXY right here, and I'll just put this in green, and I'll make these a little bit bigger just so we can see them. All right. Here we go. Now let's take a look at what happened over here, starting in 2001. DXY puts in, a monster top, which we still haven't gotten above that high, since 2001. And at the same time, gold was basically sitting on the floor. And at the same time, you can see that gold, went on a tremendous rally. Tremendous rally. We'll put that in gold for gold. Gold for gold. And at that same time, DXY was, I mean, it's not as like, I can't go in a straight line, right? But you can see that, this nuked, right? Like this just completely nuked. So gold up, DXY down. So pretty negative relationship, right? And then of course, moving forward here, you can see that gold started to pull back. I guess I'll put that in red. That's fine. Gold started to pull back, and what did DXY do? DXY did the opposite. DXY went straight up. All right. I guess I'll just put this in gold too, because we're going to draw some more. I want everyone to be able to follow. So again, DXY down, gold up. Okay. Now DXY moves up, gold moves down. All right. So, what's going on right here, right? I mean, there's times when they can sync up a little bit, right? It's not as simple as up and down. A lot of it has to do with Fed policy and interest rate decisions and all that stuff. For example, here gold rallied hard, DXY kind of moved up, is more so chop, I would argue. But on a high time frame, right? Like there is a relatively sort of negative relationship. And then similarly, right here in 2022, when DXY put in its kind of local blow off top, gold put in its capitulatory bottom. Again, so they are, at least in recent years as well, there is a correlation between these two. All right. There's very much so a correlation. And I'll draw these out with a dot. Okay. So gold put in a bottom, DXY put in a top. And what's happening right now is gold, is completely breaking out, right? Like this is, gold has broken out aggressively. It's moving up. And in the short term, we are seeing DXY show a little bit of strength. But if history is any indication, these two pairs tend to have more of a negative correlation to one another than a positive one. Again, there's little windows of time where they can move up together, but ultimately, when things are healthy-ish, they move against each other. So is gold leading? Gold is now breaking out. So the question here is, are we about to see DXY roll over and again see, another one of these famous negative correlation periods when the dollar, loses strength aggressively? Here, we'll put this in blue this time. And of course, we see gold, rallying aggressively. I guess time will tell, right? It's not as simple as just like up or down. It's typically how they work, right? It's more rare to have a strong, DXY, strong dollar index. It's more rare to have a strong dollar index paired with a strong, gold pair. It's usually the opposite, right? And we can actually pull up here. Let's see, correlation coefficient, and we can put in here. Oops, gold. So this right here is correlation coefficient. So what this basically is when, we're up here, when this line is up here, that means that there's, a more positive correlation. Okay. And when it's sitting here low on the floor, that means there's a negative correlation. And again, what that means is negative correlation is they're moving opposite, positive is they're moving together. So you can see pretty clearly here measured. I mean, it oscillates, right? There's periods of time when they sync up, and there's also periods of time when we get these tremendous amounts of negative correlation. So and typically after periods of positive correlation is when we begin to see big moves happen. So again, right here, positive correlation, and then what happened? Then they start to diverge from one another, right? Um, Again, I mean, we could look at right here, positive correlation, DXY goes straight up. And then, of course, gold, it's a little harder to see, but again, straight down gold nuked pretty hard there. So we're kind of moving up into that period of a positive correlation where, again, as mentioned, gold is breaking out, DXY is up a little bit. So maybe over the next, quarter, we would look for this, the correlation coefficient to start moving down, which would, of course, I would imagine bring DXY down and gold would just continue up. But of course, we're going to want to see, we are going to want to see this correlation go negative, right? And here I can actually put this back up, and what we can do here is I will delete all of this, and I will delete this, and I'm going to put up Bitcoin here now. Okay. Oops. Let's put up Bitcoin USD. And we'll move this up. And we'll go to the weekly time frame. So what I would really like to see here is, this correlation coefficient between, between gold and the dollar, begin to really kind of like, I want to see it back down on the floor, right? Like and typically like that's kind of what would align with like a new bull market is this being on the floor, right? Like we want to see that's when you get like crazy, crazy outperformance is when the correlation coefficient between gold and the dollar really just kind of a weakening dollar. Um, that's what we want to see, right? We want to see the dollar weak because it is a headwind for risk, Again, we don't want to see we don't want to see this happen again. So here's Bitcoin. Look what happened last time DXY went up aggressively. It was not good for our precious Bitcoin, right? It nuked pretty hard. So anyways, just something to keep an eye on. I don't think that DXY has too much higher to go, but again, we want to be a little bit careful. We also want to be aware that if DXY gets above say 107 and flips this level, we could sweep it. We could do this. Ultimately, we do need to see it moving back down, most likely. So, and that's really it for today, guys. Thanks so much for being here. This was 10 Minutes Max brought to you by Because Bitcoin. Certainly a lot to keep an eye on. Before you go, if you could please consider liking and also subscribing if you're new here, that would be fantastic. Additionally, check out the first link in the description below where you can sign up for our premium Discord and you get to see behind the curtain on how I position premium setups, premium analysis that we don't talk about here on YouTube or on Twitter. So definitely check that out. We do over 2 hours a day of private live voice calls with Q&A as well. So you get basically 24-hour access to me and the rest of the Because Bitcoin team. Check out the second link in the description below. That will take you to BB Academy. It's our new Academy series. We worked on it for over 6 months. If you want to expedite your journey to navigating these markets, learn TA, learn from experts like myself and the rest of the Because Bitcoin team, and save yourself a lot of time. Check that out. Again, you buy it right now before the price goes up. You own it forever. It's $199.99. And again, it will save you a lot of time and really help provide a lot of clarity to navigating financial markets. And again, we teach you everything that we have found success in for navigating these markets from a technical and I guess also fundamental side. It's basically years of knowledge all compressed into a masterclass. So second link in the description below. Last but not least, if you sign up for our Discord, which is the first link, within the next 45 days, you will get access to our new flagship product called the BB Terminal. It's basically a Bloomberg terminal, but for crypto guys, we bundle everything that you need to navigate these markets all data syndication into one neat and tidy website. And again, it is built by the Because Bitcoin team and analysts working very, very hard on that. It's got portfolio tracking, derivatives data, heat maps, spaghetti charts. I mean, literally everything that you could ever need, all put into one. And again, that will be given to you for no additional cost if you are in our Discord. So sign up sooner rather than later. Guys, thanks so much for being here again. Please like and subscribe, and we will see you next time. Take care.